Welcome back, folks. Thank you for your patience. I was having an extended Father's Day celebration. A lot of my family members are all spread out because they're older now, so we have to do things a little differently now that they're adults. So thank you for that. All right, so we're looking at the dollar index. You can see that we did have a breakdown away from that volume imbalance today. So that is one more reason why it's significant and important, rather, to understand where these exist in price, because they can be catalysts that cause short-term reversals or altogether a complete reversal. So while the jury's still out on how far this is going to push, we're going to cover how I used the intraday price action today and the reaction in here on switching bias. As you know, on Sunday's review, I was giving the market an opportunity to provide a willingness to go higher up into the imbalances that were shown here, fair value gaps and such. And I want to go into the hourly chart. Don't want to spend too much time on this video. And you can see we worked up into this, positive candles in here, really respecting the top end of that volume imbalance on the daily chart. Market breaks down today, and this is in London. So we have a breakdown, come back up, rebalance, and then a heavy distribution comes in. Now, if we see price want to create a reversal at a logical level on a PD array on the daily chart at volume imbalance, okay, so it didn't have any willingness to want to go higher. It broke down, then came back up into an area where we would look for weakness to occur in any other instance. I didn't like the fact that we moved this far away on the volume imbalance from the daily chart. So when we see this movement here and it comes back up and retrades back to it, and then it shows a willingness to go away, this right here, this signature right there, okay, when it respected it here and broke hard, your eye has to start looking for the liquidity pool and or discount arrays. Okay, and I'll give you a few of them right away. Short-term low here, and then the relative equal lows here. And go back to the commentary I gave in the last few commentaries regarding relative equal lows and relative equal highs. So when it's a higher low to the right than the left, then we really have a nice signature for a low resistance liquidity run there. So ultimately, you can see it does trade down there. But in here, we have optimal trade entry. This setup here is 7 o'clock in the morning. And as it started to break down at 9 o'clock, it really started to accelerate. But this optimal trade entry in here had me thinking I was wrong on my bias. So I have to make a change in my strategy. So I went through the pairs, I was looking at it, and I just didn't like euro dollar. I just didn't feel good with euro. I felt that cable was a little bit more of a safer bet. And with that, let's go over to cable. All right, so here's the British pound versus US dollar. This is a daily chart. And you can see right away that we had the order block here. We traded down into it, and I'll show you that right here. I sent this on Instagram, and I was telling everyone basically just to study that. And we got a nice reaction on it today. Did we break down like I was allowing for? And this is one of those things, especially if you're a new student and you haven't been with me for a while in the mentorship. The commentaries are basic roadmaps or what my thought process is before we go into the next trading session or next trading week and what I'm looking for. Now, it doesn't mean that it will absolutely unfold to that, but I'm giving the room for it, okay, or the opportunity for the market to suggest it's going to go to the levels I'm referring to. If there are times in the marketplace where I can see real time that I'm either wrong or a new setup forms, then I'm going to go in and give you an opportunity to see what changes my gears, what makes me change my mind about something that would otherwise be laid out in a commentary, whether it be midweek or week ending. So we had the market trading at the bullish order block. Couple that with what we saw in the dollar index. It moved aggressively away from that volume imbalance. Then it set up an optimal trade entry with a fair value gap on a potential low resistance liquidity run to relative equal lows, as I just showed before we transition to this chart here. When we look at cable and if dollar's looking to go lower, then this is going to be a mirror image. And I felt more comfortable with this if it's going to go up. Look at this gap in here. So we have this candle's low, this candle's high. So this one single candle is a SIBI, sell side imbalance, buy side inefficiency. So if I take the little trend line tool here, all right, so now we have a reference point when we go down into lower time frames. And previous days high is always a likely scenario, but if it's going to go higher, it's going to give me a clear signal inside of the 8:30 to 11 o'clock window. Okay, so let's drop down into a lower time frame chart. All right, so here's the hourly British pound versus the US dollar, and I'll give you a moment to take a look at this before I add the lipstick here. All right, if you're not ready, pause your video. All right, so here is what I was looking at. We have the market trading down into the order block. That's what's being shown here. And then the market trades above this up close candle, which is a bearish order block. This is another bearish order block. And we have a bearish order block here, and we have a bearish order block there. Big BBS body candle. When we start breaking through bearish order blocks and then finding some support here, and then it rallies, right away my eyes say I'm looking for markets to send this thing higher. In other words, I want to see it go up. And so if I'm bearish, I immediately abandon that, because what's unfolding is the market maker buy model. This high here is part of the original consolidation. Okay, so that's what I'm looking at. Now, in a larger fractal, we have this consolidation here where we left it, came back up into the consolidation, distribution, redistribution, another level of distribution, smart money reversal, low risk buy, then reaccumulation. So what's occurring is all the up close candles in here, if you draw that out on the other side of the curve, and you may not be able to see it very clearly, but this is the curve, and to the left of it is the sell side of the curve. Now this is the buy side of the curve. So everything on the left hand side is matching up with the buy side over here. So we have a bullish order block here, it trades down into that, and then we come back down into it here 2 times, digging into this order block before we run up above this area here where buy side liquidity would be resting. It looks like it may want to go above here, and this is just a smaller market maker buy model within a larger market maker buy model. Okay, so in other words, it could potentially trade up in here, and we're going to see if it does that. It may not, but either way, it didn't need to do that for me to find a setup in this on the long side. So right away, some of you are rattled by that. Oh, you know, you didn't say this in the weekend commentary. Right. That's how it's going to happen sometimes. You're going to look at the information that you look at on the weekend when the markets are not trading, and then the market opens, and then it's going to do what it's going to do. So either you get smoked by it, or you stay on the sidelines, or you get in sync with it. I'm not trying to arm wrestle with IPTA. If it's going to do what it's going to do, then I need to figure out what it is it's trying to tell me. What is it providing me? What information is it giving me? So here's the hourly chart, and I'm going to pull up the fib so we can get the range for our dealing range here. So we have the low up to the high. Okay. And you can see right away we trade down into optimal trade entry here. More specifically, we're going below the 50 level. Okay, so now we're in a discount market inside of a bullish order block, and we have a fair value gap there. So it's coupled multiple things, and then we start looking for upside expansions. So let's drop down into a 15-minute time frame. All right, this is the 15-minute chart on the British pound versus US dollar. You can see the optimal trade entry in here on the 15-minute time frame. We'll drop down into 5-minute chart in a moment, but here's the fair value gap here. This candle's high, this candle's low. So we have a buy side imbalance, sell side inefficiency. Market will want to rebalance that. It does. And it trades into optimal trade entry, and it's ahead. This is our New York kill zone. But in the 8:30, and I hope you don't mind me staying with this a little while. I don't want to go into the kill zones for discussions, because I really want to nail down what I gave away in the free YouTube channel. I want you to have a better value of what you're getting here in contrast. So that way you won't be behind the curve on anyone that would be studying on the free level. You're going to be always ahead of them. Okay, so here's that New York session, and you can see we do trade back down into the order block here, and I'm going to take the fib and show you that that in itself is also an optimal trade entry, and we'll see that on the 5-minute chart as well. So it's nothing terribly different in regards to this here. This is what I was seeing. So I was discussing things with my sons this morning, and I did not catch this at the time. I watched it trade down into the order block here. So what is the backdrop? The backdrop is we already have an optimal trade entry. If I was in front of my computer, I would have been here, but I wasn't. So I was watching the order block here. So when it drove down into that, I'm interested in pursuing that as a long, knowing that this is a near-term objective, and then this is where that fair value gap closes on the daily chart. Okay, so it could potentially reach as far as that. With the upside expansion levels, marked here, as you can see. So you can see the price run, retracement. Look where it's trading into. See these lows right here? This candle's high, this candle's low, fair value gap. Trades into it here, trades into it here again with 62% retracement level, then explosive move to the upside. What's occurring here is it's getting in sync with the breakdown on that dollar. So if the dollar's creating an optimal trade entry that's going to run low resistance liquidity on the sell side, then this is going to be running buy side. So I want to know, what is it reaching for? So if we go back out to a hourly chart just for a moment, it's going to be this high here initially. That's what I'm aiming for, and I'll be content with that just as a buy side liquidity, because I could be wrong. It could have went above that and then traded back down and started going sideways. So again, my exit strategy, if I'm going against my bias, I'm going to take the low hanging fruit and I'll leave 30 points on or 30 pips on the market run, and I'm not worried about that because I went into the week wanting to sell short and look for reasons to do that, but because I felt comfortable switching bias, because we're in a market maker buy model here, then I'm going to be more aggressive about how much I take off and where I take it off at. So I'm not trying to get every piece of meat off the bone, and this is one of those instances where it just pans out. Now, if you missed this, if you didn't see it coming, just take this as a mode of instruction, because it's going to happen. You're going to look at the market, you're going to have some predetermined assumptions about what you think is going to occur or what should occur, and then the market starts telling you otherwise. And if it does, you have to be flexible and say, okay, I have to get in sync with the algorithm. The algorithm is not going to wait for me. So it either will punish me for being incorrect, or if I get in sync with it, it will reward me. In this instance here, you can see how changing bias and what constitutes that. Now, what again, before I leave this video, what constitutes the reasons of why I was comfortable with changing my bias from the weekend Sunday review and commentary is that we were unwilling to go lower, breaking all of the sell side of the curve here. And when it came back down time of day, dollar was flashing an obvious short selling opportunity. And if it's going to do that, then you have to get out of the way and either go long foreign currency or move to the sidelines. And I'm a little bit more versed in it, so I elected to go in and got out above here at 124.55. And I didn't get any of the additional run here, and I'm okay with that. It's no problem at all. No boo-boo, no bruised ego, no nothing. It just shows that you have to have flexibility, because if you force, again, your will, then you're going to have a problem with this. Okay, you're going to have to be more flexible and also listen to what the market's telling you. And I understand a lot of you new folks aren't going to see this because you're not familiar with the overall structure of what I'm showing you here. But it is taught in the core content. It is taught in the mentorship. I'm not making all this stuff up to make it look good. Okay, I promise you, if I'm lying, everyone in the mentorship will call me a liar on my Twitter feed right now. Okay. All right, so that's going to be it for today. I will touch base with you tomorrow. Until then, I wish you good luck, good trading.